today. You guys will overall, I think at least, be very happy for this call. All right, it's gonna be super saucy. It's gonna be super good. So let's just dive right into this. So starting off, today pretty much I will cover the Fed injections, deviations for overall the ST. So we're gonna combine it with ST. This is an individual thing, you could say, but combining it with the ST model will overall improve the ST model tremendously. All right, you will have a tremendous difference from using just ST, and the difference will be major if you combine it with the Fed injection deviations, which is something I'll talk about, and I'll pretty much talk about how to use them, but also pretty much why they work. Plus, I'll also be giving you guys a hard time frame narrative for this week on the DXY and USD, and lastly, for the people that want to stay, I'll just show you pretty much some little small glimpses into premium. Now, let's just overall start right here. So, as everybody can see, this is a normal ST, right? Where we pretty much have the times 9 to 9:30 and 15 to 15:30. What usually happens during those times is, of course, that we either create a high in them and then sweeps the high, and I'll teach you pretty much how you distinguish between having a high of the day, low of the day in these given times, compared to having a high and then you wait for a sweep of the high, because either one of those two things happens during these two times, right? And of course, in some instances, it fails, but most of the time it works. But you remember, you have to combine it with a higher time for narrative, so you can't only use this alone. So if you're, for example, looking for lower prices, you want to look for a high of the day or an high get a sell in the 9:30, and then a sweep of that afterwards, and then of course you're just watching for macro entry and then down. And today yes, it's recorded. And then of course you have the vice versa here. All right. Now of course here you have another scenario where you overall have the low of the day here and the high of the day here during those two different times. Now if you go back into countless hours of data, you will see that 9:30 and 15:30 usually create either the low of the day or the high of the day, or an intermediate high or an intermediate low. Alright, during those specific times. So those ranges are very important, and it's just the Fed injection times, right? So this is also example of what can happen, right? So pretty much we consolidate here, manipulate and distribute, right? So this overall is the sweep. So this is what you guys would categorize as an ST model, but today I'll pretty much talk about this sort of STA model where we have a low or high. It's not an STA, it's an ST. I'm sorry, guys. I'm just, I usually say STA. But there's also another example where we have accumulation right here. In this, so we have a low, and then we sweep that low, and then pretty much the distribution higher. Right here, you have some examples of it. This is pretty much taken from Friday, 18th of October this year, right? As everybody can see. In here, we would overall look for higher prices prior to it, so the narrative was actually bullish, I would say at least. So as you all know, pretty much here you have an example of an ST, but you could also have taken this. So as you can see, we swept this, traded down lower, swept this, and then traded up higher, right? So it's an ST to an ST, right? And I'll teach you how to distinguish them all today, alright? Because you pretty much know every single thing once we're done with this call. It's gonna be amazing. Now, same thing here. So simple stuff, right? Now, of course, here you have a 9:30, 15, 30. This is pretty much how you deviate. Here's like this is pretty much how you use the Fed wire manipulation deviation, you could say. So pretty much the first thing you're gonna do is just grade it. So you're gonna just plot the fib here. I forgot to add the fib levels, but I'll pretty much add them in and I'll send you guys them. But it should be very simple. So in this, you just add 1, 0.5, and 0, and then 2, and then 3, and then 4, and then 5, and then 6. You could also have 4.5 or 3.5 because you could also use the half points of this. Alright, everybody understood? Now you just create it downwards as well. So as everybody can see, we created it downwards here as well. And now you do the same thing for the 15, 15, 30 here as well. So now when that's done, what do you look for? You look for overall alignments between them. Right, so here you have alignments, here you have, of course all of this is not alignments, right, but then you pretty much, this is how I look at them. So I start like at the number 5, I start at the relevant figures, right, and what I mean by relevant figures is like where you're looking for next day's high to be, right, so you maybe have some like thoughts and predictions of pretty much the area of where you overall want to see in high of the day or in low of the day, right? So you can combine it with like higher time frame deviations from VWAP gaps, order blocks, whatever you want to use, like quadrants of those different period arrays. In that, and of course, then you pretty much just align them with this as well, right? But now you just start at the things you want to look at, right? And of course, I just added in all of them here. But of course, then you only add in the ones with alignments. You can see here we had an alignment. Here you can see we had an alignment. Here you can see we had an alignment. So it's the same thing, but I just taken away all the levels which did not have any alignments. Of course, because you can't use all of those levels, it would be too random. So you use the ones which aligns with the previous day. So you can see here's the day we were looking at. You can see here's 00. I'm sorry for that, guys. And of course here you have the given previous day, and you just use this one for that given day you're trading, right? So you use the previous day's Fed injection deviations for the given day you're trading, alright? And I've pretty much shown you the levels I'm currently gonna use as well, so don't worry, I'll show you like for tomorrow as well once we actually go there. But that's the end of this call, right? You can see here, what does this create? What did it create? Created pretty much high of the day. And here you have a low. You can see the reactions here. And here you have the low of the day. So you pretty much got the high of the day. Got some levels here where not really anything happened. You can see here actually something happened, but you would only use this for one given day. And here during this day, if you would have traded this day, you would have used the level, the Fed wire injection deviations you got here, and you can only use 2 of them or maximum 3 of them to get alignments, right? 3 of them, that's the best, right? But 4 of them, it becomes too random, alright? Because then you'll find alignments everywhere, which is not something I would recommend, because it becomes too random and you want to minimize randomness like I've talked about, right? And that's why you want to focus on the areas where you overall think the high would be, right? So everybody understood what I previously said, hopefully, at least. There's a low of the day here, high of the day here, so the levels actually got this. So let's just move on. So as everybody see here, we have an Fed wire manipulation. So now we're actually, this was just the levels by itself, right? So nothing random here, right? It's just the levels by themselves, nothing crazy. Now we go into the crazy stuff, alright? You maybe thought this was a little bit crazy, right? It's not really anything. Now we'll go into the crazy stuff. So starting off, guys, what do y'all think would happen if we overall accumulated in this level and we have not reached this level yet? What do you think price would do? If price has not reached the levels in, for example, this 9:30 Fed wire injection time, and it has not reached the previous day level, which we got from another Fed wire injection time of a deviation, right? So this a pretended deviation area, right? Or deviation alignment area, right there, as you can see. So it's a Fed wire manipulation deviation from previous day. Price has just accumulated during this, so pretty much created red tick wise or such, or just another high, but we have not reached into any level. Price will reach that and create an ST after the fact. So once price have reached this will become the high of the day. Alright? Hopefully everybody understood. And of course it goes vice versa as well if you're looking for a bullish scenario. So something like this. Where over at accumulation does not really need to be an accumulation, it can just be a range, but we did not meet any level here. And then of course you want to see that level getting tagged after the fact. So you see us trading into that level, and then you see the distribution, right? Hopefully you guys understand. Now what would happen if we overall trade into that level during that given time? then this would overall become the low of the day. And I'll show you guys some examples of this, alright, or quite many examples of this, because this is, as you can see, I don't know, you can't see it, but it's actually 50. So we have quite a lot of things to go through, right? So this is the Fed wire manipulation deviation from the previous day. If we trade into the Fed wire manipulation deviation during that given time, during that given macro or Fed wire injection time, it will overall create the low of the day. Alright? So then you will have the low of the day. Now couple that if you overall have same thing, but this is overall bearish scenario, right? So if you're overall looking for lower prices, you would see something like this if we trade into the level right here. Before I was caught up by my Wi-Fi, right? And that's why it's like cut here. We talked about more or less if a range got created and the range did not hit any of the algo level or Fed wire manipulation deviation, alright, from the previous day, what would happen is that we would overall do a normal ST here, alright, and we would overall create the low of the day and sweep the 9 to 9:30 range. Hopefully everybody understood. Now, what would happen then if we overall in that given time traded into the Fed wire manipulation deviation from the previous day? Then that would overall correspond to a low of the day. Of course you have to combine it, so overall if you were looking for high prices, that would be the low of the day. And overall if you would look for low prices, that would overall correspond to the high of the day, right? So if we trade up to an algo deviation level from the previous day during that given time, during that given macro Fed wire injection time, we would overall create the high of the day if you were looking for low prices. Make sense? And that would also correspond to an ST. So there's two different, more or less, STE you could look for, right? You have, but both pretty much create high of or low of the day. Now here you have the same thing, right? Same thing here. We'll just overall put some deviations on them. We'll overall just use the ones which corresponds to an alignment. So here you have the ones which actually corresponds to alignments, right? As everybody can see, we have this level down in here. We have this level right here, and you can see more or less like this is what you have to approximate, right? So overall, if you're off by 1 pip, or if the levels is off by 1 pip and not fully aligned, that's completely alright. You could still use that given level, right? Just note, right, and I think I have some other examples later down the line where I actually show that I more or less use both of this. So if I would have one here, which is of course the 3 and 2 divided by 2, so it's the 2.5 right here. Overall, what I would look for, right, is I would maybe place a level here and I would place a level here, right? So I'd place a level here and I'd place a level here, and like the area that creates, that would be the corresponding thing I would look for, right, of an high or low of the day if in that given time, right? So in here I think we will look for high prices. This was euro on the 23rd of October, so pretty much this was the low. I was more or less looking for a low here, and I would look for a reprice, and then of course I want to see a sweep of this week actually, and we'll look at that later. But overall what you guys want to do is this, right? You want to plot, you want to look at all of the levels which of course you guys find interesting. You want to find the alignments, take away rest of the levels, and then of course you want to look at the given day you're going to trade. So this is the day, this is the levels we're going to use, and this was the previous day. So here you have the previous day levels. You use them on that given day you're trading. Alright, needs to be previous day, can't be a day like in between. It needs to be the previous day from the day you're currently trading on. Alright, nothing else works. It becomes too random if you're gonna use too many levels. It's not gonna work. Alright guys, you can only use the levels corresponding for the previous days algo or a Fed wire injection time. Alright, I'm sorry, I have something called algo levels, but it's not this. That's why I pretty much maybe missay it, right? Because I see algo levels instead of Fedwire manipulation deviation, right? So you can actually see this was actually what I looked for during this for the students, right? So I actually used this during this day. So you can see here was the low, precisely which we used, and you could see we pretty much looked for a low right here. As you can see, 23rd, 24th. Here was the 24th. We looked for a low here, and then higher prices. So you can see pretty much this was the level. You can see corresponding level here, right there. Corresponding level during which period? During 9 to 9:30. What would that correspond to? Low of the day, right? So see how this changes your mind. Of course, did not trade into that level precisely, but look, it still more or less went into it. And of course, if you know about big figure levels, it actually traded into the big figure level right here. So if you would have looked at institutional price levels, you would have an institutional price level just over this. So of course, a little bit off, but of course it can be more or less like a pip off. All right, just if that happens, you know, I missed this, guys. I missed this, and it's thanks to this. Or it's just thanks to that we did not trade into the level. I actually missed it, and that could happen, right? Then don't, you know, then if it misses that level, that given level, just don't go in and, you know, gamble on it or become mad, because this happens, right? It happens to everyone. The markets, of course, never moves perfectly 100% of the time, right? So everything can happen in a given markets, right? So you can see we had another level here. We traded into that during that given time. Do you think the level is valid? Pretty much after the time, it's not valid, as we've already traded into it during the given time, right? Or very near to it, at least. So then what do we trade to? We trade to the other given level, which we have not previously traded to, and that becomes the high of the day. You see here we start a new day, 25th. Low of the day, and then high of the day from the given manipulation deviation. You can see here. So you can see this was the one with a 4 and a 6. And you can see I deviated from this high to this low, this low to this high to this given low, and vice versa. And that would give us these two levels. Of course, not 100% precise, but of course, like 1 or 2 pips off, it's still crazy good, right? If you think about it. So let's just now go to another example right here. So in this example, we overall just found the manipulation deviation, or Fedwire injection deviations. I'm sorry for, you know, missaying the name, but just know this is manipulation, or Fedwire manipulation deviation. Alright, so you can see we use this right here, and we use this one right here, and this is overall another corresponding thing. Like I told y'all, right, if you have 2 levels real near, or like 1 pip, like 1 pip of a difference, smaller, cannot be larger than 1 pip of a difference, then I would say it's too random. You could use 2 levels, right, instead of 1. And you can see it pretty much perfectly aligns with this low, right? So what would you look for here? Right, you would not want it to just trade into the level and then higher. You would want it to sweep this and go a little bit below this level and then high prices, right? So you have to be very clear. Like, of course, it could create equal lows. Would you trade high, or would you want to take a buy once it, once you have actually equal lows? Definitely not. All right, definitely not. And then of course you can go back and look. This is Monday, 7th of October, right? But what I want you to do after this call, right, is just go in and backtest all of this. So don't think this is just too random. Don't think this is just hand-picked examples, because if you go in and backtest this, you'll notice like this is something which you overall never ever have heard anyone else have talked about on YouTube. All right, so this is something completely alien, all right, from any other person out there which have talked about ICT concepts. Because this is, I would say, the real ICT concept. So overall, now you would look for 9:30. If you have not created or traded into any of these levels, of course, in here you would look for high prices. I think, at least, I think so. I'm not too sure, but this hand-picked examples actually, but pretty much in here. If we were to create a range, we would look for an ST, we would look for a sweep of that, and we look for us trading into one of these given levels, and then we'll look for a trade off this. Combine it with higher time frame narrative. Right, I actually forgot the narrative in this particular case, but we'll see where price will go, where price will reach for at least. But I think price will reach up higher here and then go down lower. So I think I was bearish overall here. So yeah, if we would just create a high here or a low in here, you would look for a sweep of that given high or a low if we have not traded into the corresponding levels, which we're looking for. So you can see we pretty much created a range here. You see here, range in that given time. So what do you want to look for? You want to look for a sweep of that given range. You want to look for us trading into the previous days what manipulation, fed wire, deviation. Alright, you see we trade into that even level right there, took out the buy side here, and you would overall maybe total soup this if you'd like. You decide, right? It's all up to you how you go into an ST. I don't really want to be that guy who overall, it's up to you to do it on a random day. So it's pretty much your back testing. Alright, this is your work. Alright, I'm not gonna do your work for you. I want you to do it yourself. Alright, but you can go back to any given random day and you'll find this works like wonders. Alright, it works like wonders. It works like better than anything on YouTube you have ever seen. Alright, of course this is hand-picked examples, but that's why I want you guys to go in and do it, right? Because I'm not forcing you guys to do this, right? I'm not forcing you guys to use this, but this is how I get my levels, right? This is how I get my levels. This is how I use them. This is how I get the high of the day, low of the day, etc., right? And that's pretty much what I'm showing you now. So as everybody can see, right, this little level right here, you could either total soup it or you could get into any other entry, right? It's up to you, because I'm not gonna be, you know, your dad telling you how to get into given model, right? It's your choice how to get into the move, right? So you can enter on any given VAG app creator, you can enter in inverse VAG apps, breaker blocks, whatever. But personally here, I would just total soup this. So you can see, bam, and of course you would target the time-based liquidity, or you would target this low. So I would take a partial here, and I would take a partial here. Why this low? Because it was created during this range, right? Just makes sense, right? Just makes total sense. Now, another example here, during that given same day, alright, because this happens mostly during our overall, you know, time after time after time after time again, right? So it pretty much happens every single given day, or at least one time a day. But you can see the other level here, the other two levels, right? So if we create a range here, we'd want to see a sweep after that range trade into that level, or we would want to see us trade into this, and that would pretty much be the low of the day. So for example, if we would have traded into this during this range, during this 9:30 liquidity injection by the Feds, we would overall see a high of the day here, and then we see it lower. If however not, we would want to see a sweep of that given range created, and we would want to see a high here after the facts, and of course enter in a macro, because that's super important here. Now of course you can see we've created just a range here, and instead we swept that later, and pretty much this is not the given low. Remember, this level is another corresponding level from the previous daily low. So now we have relative equal low. So what do you want to expect? You want to expect a sweep of this, and I think I show here. So you can see here, right there, and this is how it looks in the background. So you can see half of this to corresponding level. I can see none of the other levels. Like, does this align? Definitely not. Does this align? Definitely not. Does this align? Definitely not. Does this align? Yeah, more or less. Like, you can see it probably aligns. You see here, perfect alignment right there. And you can see here, this is the other corresponding level from the previous daily low right here. Since we just wanted to see a sweep of that. But even if you saw a sweep of that and you would have entered at this given low, like you would have traded retail, you would still not have gotten stopped out, right? You see here, trade up higher, swept this maybe later. So you see pretty much later. Now, what did everybody think of that? I'll show you guys a real example after this as well, like once I'm done with the correlation, etc., etc. So for this given week, I'll give you guys the levels, etc., etc. I'm looking for tomorrow as well. But for this given week, you can see on Tuesday, pretty much we have the CB consumer confidence, and we have JOLTS at 50.00. We're also on Wednesday, pretty much right here. You can see we have some Euro news, and one overall red folder US news, US news event. We also have Thursday, some US news event, and of course Friday. Actually, we have non-farm payroll here. Now, I personally would trade Monday, Tuesday, Wednesday, and Thursday. I will not trade on Friday. Instead, I'll just wait out Friday. Uh, Wait out the first given week. So I'll trade again the 8th of November. But I'll trade, of course, 28th of October, 29th of October, 30th of October, 31st of October. Those are the days I'm gonna trade, and then I'm gonna wait a week because we have pretty much elections coming up right here, and I would just want to wait those out because we'll pretty much have, I think, manual intervention during that given whole week because you're gonna see major maybe cyber attacks or something like that coming in, or anything can happen during like elections, right? Anything can happen. So I'm not gonna trade during that because the Feds is gonna manipulate markets real much and inject a lot of liquidity and do a lot of manual interventions, etc. So I'm not just gonna trade it because it's gonna most probably be real improbable, right? So on Tuesday, what do I think will happen? And actually on Monday. So on Monday, now overall speaking for the DXY, what I personally would like to see, all right, is just higher prices for the DXY actually. Believe it or not, alright? I would want to see the previous weekly high getting taken out. And I would also want to see the 60-day IPTA high getting taken out, which is time-based liquidity. And what do I want to see after that? Then I want to see the low prices, alright? So I'll actually be bullish, right? Before we have taken out the 60-day IPTA high, right? So I'm going to be bullish. Of course not, right now, but I'll show you guys how I think, right? You guys will understand once we actually go into it. So now on Tuesday, right, as everybody can see here, same thing on Tuesday. I want to see a manipulation here, and then on Wednesday, maybe even a high get a sell in for the DXY if we have taken out the 60-day IPTA high, right, and the previous weekly high for the DXY now. And then on Thursday, I would just want to see distribution and Friday distribution. So even though I don't trade Friday, I want to see distribution here, and I want to see distribution or bearish prices, low prices for the DXY. Now, pretty much as everybody can see here for the US dollar index, you can see pretty much I am bearish, right? I am bearish, but I want to see this high getting taken out. As you can see right now, we pretty much have an equal high stance right here. And a lot of people will say, oh, maybe it is SMT between it and euro. And of course, we have an SMT there, but I think the SMT will actually fail. Alright? I cannot tell you guys specifically why. Or I will not tell you guys specifically why, but that's pretty much what I'm looking for. I'm looking for this high, 68, the high, get it taken out. I could be completely wrong, and it could just fall from here, right? But I would personally want to see this time is liquidity and this time is liquidity getting taken out before trading down for the equal lows and also previous yearly low. So here you can see a zoomed in version of the higher time frame version with a market maker sell model. I don't know if you've market maker sell model right here. Now I would want to see the 68 the high get it taken out right here, and also the previous weekly high, as everybody can see right there. So time is liquidity, time is liquidity. I want to see a sweep of that. Maybe I'll straight into this favor gap and then just drop down lower. Now, as everybody can see here, this is the time is liquidity. This is also the time is liquidity. I would just want to see a sweep of this. Maybe Wednesday high somewhere in here, and then low prices. I'm gonna watch this as well. This order block right here. So you can see pretty much that perfectly aligns the OT from this swing high to the swing low. Perfectly aligns with this. Alright, maybe even more perfect if you just, because you can see a little bit of a gap here. So you see I misplaced it a little bit, but you see 0.79% level right here. Perfectly aligns with the high. I think we're going to trade up to that level and then trade down lower. So I think that would be the high of the month or even the year. Not the year, but you get it. You get it like it's a monthly high. Now for this given intraday, intra-week, right? I would say the first half of the week, or like mid-week. You see here. So this is the mid-week overall predictions, right? And of course, all of this is just predictions. So don't follow this, right? Don't follow this. Follow your own predictions, guys. Always do it. Never follow mine. But we're going to see this time is liquidity getting taken out. I want to see the higher time frame time is liquidity of the 60-day, the high getting taken out as well. Now you can see pretty much here, I would want to see a drop here. So I would want to see us gapping down lower here. and I would want to see us consolidate, and I would want to see us sweeping that given low, trade into that given level right here of this order block where it's actually a breaker, and I would want to see higher prices into this time-based liquidity, but it's still a mitigation component right here. And I want to see that time-based liquidity and this time-based liquidity getting taken out, because a lot of people, I've seen a lot of people think this is the high, and I don't really think it's the high. I think soon it's the high, but I think we need to sweep this, sweep the today 60 high, and then we're gonna see the low prices. Now, which levels am I gonna use for the given day of tomorrow? So as everybody know, this is the 9, 9:30, 15, 15:30, and look, I'm actually gonna be super nice here. So what I'm looking for, right, on the 5-minute time frame on the DXY is overall a low of the day here, and I'll pretty much combine the 0 level with a half of 2 and 1 here. Let's see here. See, I'm gonna use this. Yeah, you have the 1 here. It pretty much does not show up, but I'll combine this and half of this, right? Hopefully everybody sees this. And I'm gonna use this because those were the only 2 alignments here for the given day. Of course, I won't use any levels under this. Why? Because I don't want to see this low getting taken out. So yeah, this is what I mean by you have to combine it with the narrative, right? Now I want to see this, and I want to see us trading into this maybe overall during any of the given component times. So 9, 9:30 or 15, 15:30, right? That would be perfect. Low of the day here during either 9, 9:30 or 15, 15:30, or a sweep of 9, 9:30 low and then high prices. And after 9, 9:30 sweep, I want to see us trading into this, or 15, 15:30 low sweep. I want to see us trading into this, and then higher prices, right? So that's what I would personally look for as an STE for tomorrow. Of course, predictions, guys, predictions, right? So don't follow word for word. Now on Euro, pretty much same little recap here. You can see the original consolidation right here. New York at 15:50. I'll talk about the New York daylight saving time. So for us, that's not really changed for London kill zones, right? However, actually the FedY injection time for the second FedY injection time changes. It's actually tomorrow 14:30, right? So it's from 14 to 14:30, right? Everybody understood? So it's not 15:30 now, it's 14:30 for one given week until they've changed it in the US as well. So until they've changed the time in the US, it's going to be 14:30 for just this given week. Then next week is just going to be 15:30 again. Alright? Hopefully everybody understood. So it's going to be 1 hour earlier, as we've now switched from UTC plus 2 to UTC plus 1 thanks to daylight savings. But as everybody can see here, original consolidation, we look for high prices. This is the monthly or weekly actually time frame on euro dollar. Now overall we're trading to this. A lot of people think this is the low because we've swept the IPTA 60 low here, which we have not swept on the DXY, creating an SMT, potentially creating the low of the month here. I don't want to really speculate in lows or highs. Now, instead I would actually want to see this getting swept, and I would want to see us trade down to the lowest deviation point, which is also the start of this little void here, or volume imbalance or something. Yeah, guys. Anyway, so you pretty much split this right here. As everybody can see, we pretty much have the 0.62 level of the OTE pretty much perfectly aligned with this. Alright, yeah, it's volume imbalance. So personally, I would want to see this time-based liquidity as well getting taken out. That would also create the 3 drives pattern where we've taken this, and now we've taken this again. So that's a 3 drives pattern, which ICT uses a lot. You see here, order block, we've just traded into that, and I would just want to see a little bit of a pre-price higher here, and then nice delivery to the downside, reaching for this time-based liquidity. So that's going to be my draw. Of course, that's my predictions, so stick to your predictions. Now, this is pretty much breaker right here, and just a little bit of a reprice here, like I said, into this FVA gap as well. Low prices here again, reaching for the down lower deviation, and also previous weekly low, and then want to see high prices. And I would speculate, alright, like ICT says, if I would have a gun to my head, I would pretty much say this would be the low. Of course, follow your own predictions again. Now, for this given day, right, because we're pretty much going to open up here in 3 hours or something. For that given day, right, Monday, I would pretty much want to use these two levels, where I want to use this and this. You can see perfect level right there, perfect alignment, where we have 1 and 2 divided by 2. You can see here. We also have this 0.5 and this 1.5. Sorry for using so weird words. I'm sorry for that, guys. I don't know why, but I just want to see us trading into that in either 9:30 or 14:30 as its daylight savings. So it's actually 15:30 normally, and it's gonna be 15:30 in a week. However, just because this is daylight savings, it's 14:30 for us. So either those two times, or I would want to see the range of those getting swept and us trading into this, creating the high, and then want to see lower prices. You can see I think this is the low. That's why I speculate we're gonna just reach up higher during the Asia, or maybe gap up higher, as I speculated. We would do vice versa on the DXY. Now, what do y'all think of this? Do y'all like this? Do y'all want to, or I'll explain it much better after pretty much we've just done this presentation, right? But that's the two things I'm looking for, right? Intra-week, etc., and also midweek, because I'm stopping trading Friday, and I would recommend everyone doing that as well. Now, of course, this is pretty much what I promised you guys. I'll show you guys this as well in the server. But this is actually what my premium includes. We pretty much have SDA full disclosure and the rest of other things. In those, pretty much this is how it looks. So I will not talk specifically about these things. I just wanted to show you guys, right, how it looks and what it includes, right? But I also have a lot of other things. So pretty much in this, all of this is just playlists. So in one of these, right, you pretty much have something like this, where it looks like this, and then you have like 40 calls or something in each of the playlists. So in each of this you have like 40 calls. So it's like 400 videos or something, which is crazy. And of course you have the analysis, you have the trades I take, right? But I just do this for educational purposes, not for anything else. Just reminders, just showing you guys that the things I pretty much use work. That's the only reason why. I'm not like the other gurus. I'm actually just showing you guys. So I'm not like a signal provider or anything like that. Never would provide signals. I just show you guys what I do real time. Personally, I would not say that signals. I just don't want to. I don't really want it to be signals. Hopefully the people in there don't use it as signals. If so, I would kick them, right? Because that's like a rule I have. I just show them what I think will happen real time, what I do real time, in the markets, etc., etc. So I also have live calls in the markets, right? And do a lot of other things. But I just wanted to show you guys, because this is like, you can see, like, I don't really talk positively about this. I don't say to you guys to join it. I say just want to give you guys a last little glimpse of this, because I'm gonna close it now in 2 days. So this is gonna be the last glimpse of this in more or less, I don't know, long time, right? So yeah, this just gives you the chance to see what's in it, etc., etc., before it's not gonna be public anymore. So yeah, I'd look for alignments here. So let's just go back like this. And this is going to be for good measures. So I look for alignments right during that given days trading. And we have an alignment, let's see, more or less here, right? More or less here. You could use this, and you could use this half one. So you have alignment between here. And of course, I think this actually we trade into this during 9:30. Yeah, look, 9:30. So perfect, guys. What do you think? There's another one. Let's see if we have another one here. And I want you guys to go back and do this. But I'll show you this final example. I think we have another one here. Let's see, 15, 15, 30 here. 15, 15, 30. 15, 15, 30. Oh wow, that's like amazing. Look at this. Don't you think this is amazing? And I think we have actually another alignment here. If you take half of this, yeah, look, perfect alignment here. Perfect alignment. 1535, sweep of 15 high, more or less sweep of this, ST lower. So look, ping pong here. Let's see if it actually went lower. So yeah, like this is one of the greatest models you will ever know, you will ever see, right? So you ever see this. So look, low of today, high of today. Everybody understood?